Hello and welcome. You're watching Last Take. I'm Shweta Kothari. With me Suyash Maheshwari. Suyash, hi. Good afternoon. Let's quickly run our viewers through how markets performed this afternoon. Both sensex Nifty down 0.2%.
Yes, Shweta. So the markets have extended their losing run to about 2 sessions now, and a very interesting session if you look at the overall, how the session went by. We opened above the 19,700 mark, faced resistance around the 19,750 mark, from where we saw a deep correction, where we also slipped below the 19,700 mark. But what happened, in the mid-morning to the afternoon trading, just before around 45 minutes before the market was closing, we were forming higher highs and higher lows, which suggests that there was buying action, for every dip. Which basically augurs well for the bulls. But overall, we saw some bit of a correction also in the last half an hour to 45 minutes, and as a result, we closed below the 19,700 mark, just marginally shy of it, about 6 points shy of it. Sensex, on the other hand, was down 0.21% for the day and closed about 140 points below at 65,655 sort of levels. The broader markets, which by the way, Shweta, the Nifty mid-cap 100 opened at a new lifetime high, went on to scale 42,000 for the very first time, could not sustain at those levels. We saw a correction of about 150 to 160 points from there on, and Nifty mid-cap 100 settled at 0.11% higher at 41,856 sort of levels. The small cap index, which by the way also scaled a new lifetime high of 13,970, just about 30 points, 35 points shy of the 14,000 levels, also dipped in the red by the closing trade and closed below the 13,900 marks, just around 28 points shy of it. India VIX, the volatility index, settled in today's session 2.7% higher, above the 12 mark. Now, one of the other things that will be more concerning for the market is that the overall breadth of the market is now favoring the bears. If we can pull up the market statistics graphic, you'd see that around 1,237 shares advanced for about 1,280 shares that declined. So pretty much 1:1 ratio, but leaning towards the bears. So 120 shares in today's trade on the NSE were unchanged. Now about 147 stocks hit an upper circuit today, whereas 65 stocks in the NSE space hit a lower circuit. Among stocks that touched a 52-week high, there were about 217 stocks, whereas only 9 stocks touched a fresh 52-week low in today's trade.
All right, that is as far as markets is concerned. I'm given to understand Ambareesh Baliga, independent markets expert, joining us on the show. Ambareesh, good afternoon. Good to have you back. Thank you for taking time out. Quickly run our viewers through what are you making of the markets movement this afternoon. Second day of losses on streets after Friday, extending those losses here.
I think at these levels, one can say the markets are still undecided whether it should move up, move from here or come down. But as long as the markets are in this range of 19,400 to 19,800, I would say it's more of a consolidation zone, possibly waiting for the assembly election results, which are early December. So I think till then we should be in this band, and post that, based on the election results, I think it should move either up or down.
Now, sir, do you expect the election results to actually have an impact on the markets, given that if there is any surprise and there is no continuity in the political party, in the ruling political party, will there be some sort of a correction?
I mean, come to think of it, since we are on politics, Ambareesh, politics tend to always impact the markets one way or the other. 5 states going to elections is a big deal. It is going to be a precursor to what's going to come in 2024, a precursor to whether there's going to be a change in the national elections, national regime, all of that, central regime, all of that is obviously going to play up on the markets.
Absolutely, because whenever we have seen election results, it clearly affects the markets for a couple of days. I'm not saying it's going to affect the markets for a very long time, but looking at the next 2-3 days post the election results, it gets affected to that extent. And again, if the results are favoring the ruling party, I think it'll be positive. If it's against the ruling party, then we will we could have some amount of correction for a couple of days. And post that, the line of thinking would be that people vote differently in the assembly election than they would vote differently in the Lok Sabha elections.
Absolutely.
So I think finally after that correction, possibly we could see the market stabilizing. Again, like I'm talking from a slightly medium-term perspective. But then if you again ask me whether we should see new highs in the near future, I think that may not be possible because I don't see some huge triggers for the markets to cross the recent highs which we have seen, unless of course if we see that the next quarter earnings, which is ending December, Q3 earnings are much better than expected.
So now the market in the last couple of months has been highly reactive to the global cues. What are some of the factors that you will be tracking over the next couple of months?
I think, see, global cues, if you look at, I think most of the negatives, have been priced in. And when we talk of the Israel-Hamas war, I think, people are expecting that to spread out more. But instead, I think that's also taking the shape of what we have seen with Russia-Ukraine. And not too many people seem to be bothered about it right now. As far as the oil prices hold on, even that should not affect to that extent. The slowdown in the global economy is already there in the prices to a certain extent. So I think overall, whatever concerns are there globally, unless of course something new comes out, I think most of that is digested in.
Okay.
But if you're talking of from a domestic angle, like I said, unless we see real major positives on the earnings, because if you look at the Q2 earnings, if you analyze that a bit further, we have clearly seen that the revenues haven't really been moving up for most of the companies, whereas we have seen the margins improving. But there's a certain level to which the margins can go up because you need to see the top line going up. So unless we see that to a major extent in Q3, I don't think the markets will be too excited.
All right, before I let my colleague Siyash come in, Ambareesh, you also briefly touched on oil. Now, oil prices have come out and come down to approximately $81 a barrel as of this morning. There are fears once again reigniting that there could be a possible OPEC production cut. Prices are not stabilizing just as yet. They're not meeting the required number as OPEC countries would like them to meet, the desired sort of, selling rate as it would like them to meet. So around those fears specifically, do you see oil prices going up anytime soon? Are you expecting a OPEC price cut or OPEC supply cut anytime soon?
No, see, if there's a major cut in OPEC supply, yes, I think the oil prices can move up, at least temporarily, if not for the next couple of months. But as far as India is concerned, as long as the oil price is below $90, I don't think it will affect the markets much. But if we start seeing oil moving more towards 95 or 100, that's when the markets start getting affected. So till $90, I don't think market men really need to worry too much.
And how big a factor will the Israel-Hamas war be? Because given the last couple of weeks, we have pretty much seen oil prices not reacting much to the ground situation in Gaza because they have stabilized around that $75 to $85 a barrel mark.
And it's been 45 days now. The Israel-Hamas war has been on for 45 days. Doesn't look like there's been much of a price movement on the back of the war.
Exactly. See, unless, of course, you have other countries or other regions coming into that war, I don't think it's really going to affect the oil prices very much. Like I said earlier, I think it's more or less getting discounted, just like the way we have seen the Russia-Ukraine war. Initially, there was a huge reaction, and then it's become a new normal. So I think this too seems to be heading, in that direction.
Mentioned that overall the earnings were good. We have seen margin expanding, but the top line has not really grown. The consumption is missing at the bottom of the pyramid. But Q3 has been a seasonally strong quarter for us, given the festive demand, given the wedding season. Do you expect
Absolutely.
that to perhaps correct demand to pick up in Q3 and forward?
That's the expectation because see, first of all, you have had a good festive season. I think the number of weddings which are going to be happening, which have happened from October, November till like January next year, I think that's going to be a record sort of number of weddings we'll be having. And during weddings, this, the amount of consumption which happens both as far as FMCG as well as white goods as well as the hotel industry is concerned. So all that is positive. And the third positive clearly is the elections, because during elections, you clearly have money flowing into, the bottom of the pyramid. So which again spends on FMCG. But one negative which has come last week is the RBI circular, which will clearly put the lid on the amount of personal loans which have been doled out. And we should remember that in the last 18 to 24 months, there's been a decent amount of consumption which was linked to personal loans which are being doled out. I think that will be a spanner in the wheel. Otherwise, I don't think. Otherwise, like I feel that we should see a decent consumption for Q3, but one has to see as to how this plays out.
Ambareesh, we've discussed this extensively, in fact, in the newsroom as well. Wanted to understand what sort of impact will it have on consumption? The fact that personal loans are going to get expensive, perhaps in weeks and months to come, hasn't happened just as yet. Do you think
Absolutely.
it's going to impact consumption? Will there be a direct hit on consumption? Or, as many of us would like to believe, that people who are taking personal loans for buying goods and services that they like will continue to do so, because there's going to be only a marginal hurt on the margins.
No, see, it's not a question of the rates increasing to a certain extent. That's going to hit anyways. But then you'll have a lot of, these financial companies as well as banks, reducing the quantum of loans which are being doled out. So this will have a two-pronged sort of an effect. One, clearly on consumption. At least to a certain extent on consumption, because a lot of this was being used for consumption and nothing else. And number two, what was happening was there were a lot of personal loans which were being evergreened. You take funding from one institution, you're not able to pay, you take from other institution and pay the earlier one. I think that cycle could break because of this. And that could, in fact, end up as NPAs, which we have not seen to a large extent, in the recent times, as far as personal loans go. I think we could end up seeing that. I'm more afraid of that than the consumption going down, because as far as the consumption is concerned, there are a lot of other wheels which are moving in their favor.
Okay.
Whereas if there's a break in this, I think the NPAs will show up.
Now, so one of the sectors that is doing well, actually one of the best performing sectors in today's trade, was the IT pack. I think in the last 1 week or so, it's up around 6 or 7%. But what are you making of these gains? Is it justified, or is it a sentimental sort of a run-up? Because the reality is ground situation hasn't really changed much.
Absolutely. I think it is only a sectoral rotation which is happening, and typically, when you see the markets moving up, then people start looking at those sectors which have not moved up, which look comparatively cheaper, and people get into that. And once the momentum starts, you have a lot of speculators and day traders and the short-term investors who get into it, so the momentum continues for a while. Because if you look at the fundamentals, I don't think things have changed much in the last couple of weeks. And if you look at the management commentary, I think the pain is going to be still there for the next couple of quarters. So my belief is that if one is looking to invest for long-term in IT stocks, I think one should look at the January-March quarter to start investing in, because possibly the Q2 FY25 could be the beginning of a sort of an upward movement from the earnings point of view for the IT stocks. So I think typically the stocks start reacting at least a quarter or two earlier. So that's the reason I'm saying should look at January to March quarter to look to buy into IT, and not right now.
All right. So one final question from me as far as the markets are concerned. FIIs have finally turned net buyers. I think they are net buyers to the tune of around 1,400 crores for the month of November. But do you think that their buying activity is transient in nature, given that, bond yields in US are still relatively high?
I believe so, because after selling for this long, I think some of them may be having that FOMO effect, because of which they've started buying. But then we should remember that from the second week of December, again, most of them go on a holiday. So this could be a short-term sort of a change of heart for the time being. I think in case they again start reinvesting from January 2024, then that's a different thing altogether. But I don't see them coming in droves just before the holiday season starts.
All right, now that is as far as the markets is concerned. We also want to touch on some of the biggest IPOs that will be opening up for the retail sector very, very shortly. The 5 biggest IPOs that we're tracking, Suyash has the details. Suyash?
Yes, Shweta. So we have a flurry of main board listings recently, and to really appreciate that, I mean, if you look at the first half of 2023, Shweta, you only saw about 10 or so IPOs hitting the main board. In November alone, 8 IPOs, including the 5 coming out this week, there are 8 IPOs that will already, have hit the streets. Just look at that graphic if you can pull it up for our viewers. 0 IPOs in January, February. It picked up. September, I think, was the busiest month for the primary market. 14 listings came out in the month of September. November is turning out to be the second busiest with 8 already so far. I mean, let's see how many come out in the next week. But overall, it's been the activity in the primary market has clearly picked up in H2 of 2023. Now, as you pointed out, 5 IPOs will come out, 5 companies will come out with their IPOs, which include India Renewable Energy Development Agency, also known as IREDA, which will open for subscription on November 21st and close on November 23rd. Another is Tata Technologies, opens on November 22 till November 24. The rest, all companies open from November 22 to November 24. You can see all the names that will come out with their IPOs: IREDA, Tata Tech, Flair Writing, Gandhar Oil Refinery, and Fed Bank Financial Services.
All right, let's quickly get into the details of Tata Tech. Mega offering, initial public offering from the Tata stable. What do we know so far? What are you picking up?
Certainly, Shweta. So the IPO first, I think, to really appreciate the Tata Tech IPO, is the first IPO from the Tata Group in nearly 20 years. The last time they came out with an IPO was back in 2004 when they came out with the public offering of TCS. Now this is the first, as I mentioned, first public offer in 20 years. The entire IPO size is of about 3,042 crore rupees. The IPO, as we know, will open on November 22nd and close on November 24th. One of the things that I think we need to point out to the investors is that it's an entire offer for sale, meaning that existing shareholders will be selling their stake, and there will be no fresh equity of share, and the price band for the issue, Shweta, has been fixed at around 475 to 500 rupees per share, which interestingly was about 250 to 300 points shy of the grey market price that was the market was pegging at for the Tata Tech stock. Now, sir, I mean, a lot of big companies have come out with their IPOs, in 2023 alone. Cyient comes to mind. It came out with an IPO after nearly 26 years. TVS was another one that came out with their IPO. Now Tata Technologies. What do you think are the factors leading to these long-standing big companies coming out with a public issue in 2023?
See, I mean, end of the day, they also need to, have liquidity. They need to have sort of a market cap, because this has been a company which has been a subsidiary of Tata Motors for ages. Like you rightly said, this is the first IPO in the last 20 years from the Tata stable. And I think the valuations are decent. So from that point of view, I think it's a great opportunity for the investors to subscribe to this IPO.
I mean, if you keep aside the Tata pedigree, the Tata name, is it a good business to buy into?
Yeah, it is a good business to buy into. I mean, looking at the sort of order flows which are there for this company, I think it's a good opportunity for people to invest.
So another company, the big company that will come out with their IPO is IREDA, Indian Renewable Energy Development Agency. The IPO opens on November 21st, and this will be the first issue from government after LIC back in May 2022.
Okay.
Now the price band for the issue has been set at around 30 to 32 rupees, and at the upper band of the price band, the company is looking to raise somewhere around 2,150 crore rupees. Now the IPO comprises of both fresh issue of shares and offer for sale. Fresh issue is about 60% of the entire IPO, whereas offer for sale is at about 40%.
All right, let's also get in Ambareesh into the conversation then. Ambareesh, IREDA, what are you making of the price band? Is it attractive enough for retail investors?
Yeah, clearly, I think the price band is quite attractive for the retail investors. And just like Tata Technologies, I think this is the other good opportunity for the investors to get in. Like among the five IPOs which are there, my top pick clearly is Tata Technologies, followed by IREDA.
Okay, let's also then quickly get into Flair Writing Industries. It's also coming out with its initial public offering.
Yes, Shweta. So again, along with all the four IPOs apart from IREDA will open from November 22 to November 24. So is Flair Writing Industries. The price band for that has been set at around 288 to 204 rupees a share. Now the Mumbai based stationery product company will aim to raise about 593 crore at the upper band of its price band, and it's again both an offer for sale and a fresh issue of shares, whereas the company will issue shares worth 292 crores fresh issuance, and offer for sale is about 301 crore rupees. Now the anchor book for the IPO will open actually for all will be all four excluding IREDA will be open on November 21, just a day before the public issue is open for subscription.
Ambareesh, your take on Flair Writing?
Flair Writing, although if you look, from a writing instrument perspective, they have a 9% market share. They've got into other household items. But then, it is not as attractive as the first two IPOs I discussed about. But then again, it is not too expensive. So if you, like from a pecking order, I would say this is number 5 among all the 5 IPOs.
Okay, I'm assuming Gandharv Oil Refinery is number 4 then?
Absolutely.
All right, let's discuss financials for that.
No, in fact, Gandhar is number 3.
Okay, so Fed Bank financials, and let's quickly get in Fed Bank financials. What details do we have?
Surely, Shweta. So again, IPO opens for subscription between November 22 to November 24. The IPO size at the upper band, upper band of the price band of about 133 to 140 rupees is around 1092 crore rupees. Again, this is an offer for sale as well as a fresh issue, and the promoter bank, Federal Bank, along with investors, True North Fund, are the selling shareholders in this case. The anchor book, as I mentioned earlier, will open for subscription on November 21st for this particular issue.
All right, how are you deciding that pecking order? Ambareesh, Fed Bank at number 3?
Fed Bank at number 4, Gandhar at number
4?
3.
Okay.
Yeah.
All right, and how are you deciding that pecking order? What are you making of the business?
Clearly, that's based on the sort of valuations which are there. At what rate we are. This is being offered. So based on that, I've fixed this sort of pecking order.
And sir, considering the number of IPOs that are coming out in the latter half of 2023, what's your overall checklist as far as before you consider before investing in an IPO? I think that will be very valuable for a retail investor.
So clearly one has to see as to from which table it is coming, as to how dependable the promoters are. I think that's most important. Number 2 is the sector and the outlook for the sector. Number 3, the valuations at which they are offering, because if the first 2 are great and the valuations are just too expensive, again, I won't recommend buying into the IPO, because they need to leave something on the table for the investors.
All right, that is as far as our IPO corner is concerned. But before we let you go, Ambareesh, let's also quickly take a look at some of the top gainers and losers on Dalal Street today.
Yes, Shweta. So among the gainers was the top gainer actually in the Nifty pack was DV's Lab. DV's Lab ended today's session about 2% higher. Another gainer was Bharti Airtel. Bharti Airtel was up 1.74% in today's trade, closed at 963 rupees per share. A couple of tech stocks featuring there, Shweta, HCL Tech and Wipro. Now this is on the back of a broad-based rally that we are seeing playing out in the IT stocks in the last couple of weeks. Wipro was up 1.2%, has rescaled at 400 sort of levels. HCL Tech continues to do well. It was up about 1.05% today. Coal India, I mean, what a story Coal India has weaved in 2023. One of the best performing stocks, not just in Nifty but in the entire PSU space. The stock once again, was in the green, was up about 0.9% in today's trade. Now,
all right, before you go to top losers, I also want to briefly touch on IT Pack, and I know, Ambareesh, you have in fact sort of what is leading to this rally in IT Pack, Wipro, HCL Tech. I think Suyash is calling it sentimental. I know you're agreeing with it partly, but come to think of it, the financials are not looking great on the basis of the numbers that have come out in Q2. A lot of people continue to call it a washout year for the IT, yet the stock continues to trade in the green.
Now, tell me, who is moving the markets nowadays? It is more of the retail, HNI, and the mutual fund, which again is via again, if you look at the mutual funds, that is again coming from retail. So it is these three buckets which is actually moving the markets. And if you look at the first two, retail and HNI, how many of them are actually buying based on valuations? Most of them are buying based on momentum. Wherever there's a momentum, money flows in there. So, like I said earlier, since this sector had not performed and the markets had moved up, people were looking for the sector or stocks which are looking cheap. So people have bought into this. It's moved. There's momentum, so it continues for a while. But then finally, at some point of time, you need to hand over the baby, and there's no one else to buy the baby, so it comes down.
Okay.
And so about valuations also, I mean, some of the bellwether stocks, the big stocks are also, participating in the rally. So from a valuation perspective, between the top 5, top 6 IT companies, which of them is looking attractive to you?
See, out there, my pecking order clearly would be TCS, Infosys, and HCL Tech. I think these are three which I would look to buy. Like I said, I would look to buy it in the January to March quarter. These three would my top picks be then at that point of time.
Also, let's look at the losers, Shweta.
Sure thing.
So, among the top losers in today's trade, among the Nifty stocks was Adani Enterprises. I mean, the stock has been on a 5-day skid. In the last 1 month, it has corrected by about 7% or so. Today, it ended about 2.62% lower at 2151 sort of levels. Bajaj Finance also continues to remain under pressure. I think in the last 1 month, the stock has fallen about 10% or so. The big correction came after RBI decided to tighten norms for the unsecured lending. So around 3 to 4% correction we saw in the last couple of sessions. Among other losers was Mahindra & Mahindra. It was, it fell about 2% in today's trade, and we saw a broad-based correction in auto stocks. In fact, auto stocks was one of the worst performing sectors in today's trade, down by about 0.8%. Mahindra & Mahindra fell, one of the worst performers in that pack, and was down about 2%. SBI Life continues to correct. It was down about 1.91%. Ultra Tech Cement also fell victim to profit booking. That was down about 1.4%.
All right, before we go to auto pack, because I think that's been a little mind-boggling today, let's quickly understand what's happening with Adani Enterprises. Ambareesh, without speculating much into what's moving the stock, I want to understand from you, technically, what's happening here?
Frankly, I don't know, because I really don't track the Adani group very closely, and especially Adani Enterprises.
All right, so let's then move into auto sector. What exactly led to a correction today?
No, I think after like a decent sort of move which you have seen in the past couple of months, I think it's just normal profit booking, because if you look at the earnings, if you look at the monthly sales which have been coming, there's nothing to really to complain about. So I think a correction in the auto space clearly is a buying opportunity. In case we see a correction of another 4-5%, I think that's a buying opportunity.
All right, so profit booking there as far as auto space is concerned, buying opportunity for those wanting to enter. Well, right now is the appropriate time. Ambareesh Baliga, thank you very much, sir, for taking time out. Thank you for joining us here on Newsline. And with that, it's a wrap on Last Take. We'll be back after a very short break.